I've been asked to speak about the role of the capital market in solving the housing problem in Nigeria. And I intend to approach this task from a holistic perspective, drawing from various successes in other parts of the world that can be adapted to the Nigerian reality. Nigeria's population currently sits at an estimated 218 million, with a 10-year average population growth rate of 2.6%. The rapid growth of our population has led to significant migration of rural dwellers to urban areas, as the urbanization rate in the country stands at 4.95%. This puts pressure on available housing and other infrastructure in urban areas. Nigeria currently faces a severe housing deficit. Estimates by the Federal Mortgage Bank and the International Human Rights Commission indicate a deficit of about 28 million housing units. Solving this challenge will entail creating linkages between provision of land to property developers through increased availability of housing finance to reduction in property transaction costs. According to the World Bank, in its Nigeria Affordable Housing Projects Report 2018, the demand for affordable housing in Nigeria is huge and growing in the face of a sizable deficit and threat of interventions that could help close the gap. The housing situation in Nigeria isn't only plagued by a shortage of affordable housing, but also quality builds, which has come increasingly to the fore with the recent incidents of collapsed structures in some states. To buttress the issues around affordability, most new housing constructions cater for upper income households, leaving an acute housing shortage for middle and lower income households. These households have the greatest need for affordable housing in urban areas. The government at various levels have recognized the importance of housing and embarked on various reforms and interventions in this sector to bridge the existing deficit. Financial infrastructures such as the Federal Mortgage Bank of Nigeria and the Nigerian Mortgage Refinance Company were established. The NMRC is a private sector-driven mortgage refinancing company with a public purpose of promoting home ownership for Nigerians whilst deepening the primary and secondary mortgage markets. The Federal Ministry of Finance launched the Family Home Funds, a public-private partnership between the Federal Ministry of Finance and the Nigerian Sovereign Investment Authority recently. The fund is expected to make the federal government provide, as part of the medium-term expenditure framework, seed funding of 100 billion naira annually over a period of 5 years. These have yielded some gains, but it is evident that the task of bridging the gap and providing affordable housing cannot be fulfilled by the government alone. There is therefore a need to adapt ingenious financing methods to meet this pressing need. Financing is the most crucial element in housing investment, and the availability of financing determines access to other key inputs such as land, labor, materials, and infrastructure. Nigeria can draw lessons from developed countries such as the US, UK, and Australia, which have used capital market instruments to fund real estate projects. Financial instruments such as equities, bonds, Reits, and mortgage-backed securities have been adapted at scale in these economies. These instruments have been deployed to solving housing needs and helped to deepen their capital markets. So how can the capital markets in Nigeria help to address the housing deficit in Nigeria? Estimates of the amount required to meet Nigeria's current housing deficit needs is put at over 6 trillion naira. The total budget for capital expenditure for the Federal Ministry of Works and Housing for 2022 is 470 billion naira, whilst the amount earmarked for FGN Special Intervention Program, the social housing, that is the Family Homes Fund, is put at 7 billion naira for the current year. These figures buttress the point made earlier that fixing the housing problem cannot be left to the government alone. The Nigerian capital market, which aids long-term capital formation, could be a good engine for driving economic growth and development. It can play an active role in pulling the much needed capital to drive the housing sector. There is therefore the urgent need to promote the use of existing and new instruments in the market that can be used by developers, private sector participants, governments, and other stakeholders to raise and deploy capital into the housing sector. In the last decade, we have raised over 72 billion naira on the exchange for major real estate companies such as the UPDC Reits, Abe Mortgage Bank, and UAC Property Development Company through a mix of equity instruments, including IPOs, that's initial public offerings, and rights issues. On the fixed income side, the exchange has a market capitalization of about 23 trillion naira, with a significant portion of this capital deployed to the infrastructure and housing sectors. The potential for REITs, real estate investment trusts, and mortgage-backed securities markets have merely been scratched in Nigeria. These bespoke instruments capital formation to plug real estate financing deficit. Currently on the NGX exchange, there are about 3 REITs listed on its REITs board. And we encourage more listings and trading of REITs to deepen this space, whilst solving the challenges of affordable and sustainable housing. Distinguished ladies and gentlemen, in conclusion, the capital markets remain an underutilized lever for addressing the country's housing gap, and I encourage us to look more closely at it if we are to unlock the much needed funds for our housing projects, as well as the millions of our populations that need affordable housing.
To understand the role of government in housing finance, one needs to understand how the responsibility emanates from international and national mandates. Housing rights were first universally codified on the Universal Declaration of Human Rights, adopted and proclaimed by the UN General Assembly in 1948. The 1996 Istanbul Declaration of the UN Conference on Human Settlement, that's Habitat 2, identified housing as the universal goal, thus internationally recognized as the basic need of man. Housing is equally identified by the United Nations as the right to adequate housing for every human. Housing and the role of government. Though housing is a right, but it depends on ability, the capacity, and the will of government. Government therefore represents the primary enabler for the effective execution of the mandate for housing delivery in respective nations. Basically, when we say the primary enabler, they're supposed to provide infrastructure, provide drainage, provide electricity, provide basic infrastructure. They're supposed to be the enabler. The critical role of government, they are twofold: provision of housing through direct means and provision of or creating the enabling environment, like I said, for its provision through indirect means. In the National Policy on Housing 2012 National Housing Program, the Nigerian government commits to develop and sustain the political will of government for the provision of housing for all Nigerians. National Housing Program 2012 delineates role between the various levels of government. We have the federal, we have the state, and we have the local government. The federal government is supposed to work in partnership with all relevant stakeholders, initiate, define, and coordinate the policy options and instruments for achieving the objective of the housing sector. State government formulate, monitor, and evaluate policies and programs, establish agency and state housing corporation for housing program, provide, maintain, and upgrade infrastructure, because as federal government provide infrastructure, those infrastructure become dilapidated. So the state government are supposed to upgrade those infrastructure, encourage adoption of the National Building Code, review legislation, regulations, and ordinances, develop housing data. This is very critical because we need data for planning. So they're supposed to develop housing data, support indigenous construction, material producing companies, encourage capacity building of personnel. Now, local government, provide residential sites and services layout, implement social and rural housing program, promote formation of housing cooperative. This is very important too, because you need to go through a medium for you to get housing. Primary mortgage bank, cooperative, housing association, thrift and credit society, encourage development of primary mortgage institutions and building society, even federal mortgage bank, that's the big elephant in the house. We were first recognized as building society, then we move up to federal mortgage bank. Maintain infrastructure and environmental sanitation, upgrade infrastructure and blighted areas, undertake staff housing, develop housing data bank. This is also very critical. Though largely limited to the role of an enabler, government are essential to the actualization of housing as a human right and global objective. Political will to execute this mandate is critical to household achieving home ownership dreams and performance of this responsibility. There's therefore a need to recognize the respective roles of government at various levels, especially the interplay of responsibility between national and subnational levels of government. Times of crisis significantly increase the reliance of government to respond adequately to stabilize macroeconomic system, including housing market, as emphasized by the recent COVID-19 pandemic. Contrary to the general thinking, global evidences show that through its agency and cooperation, government do indeed have a business in doing business.
My name is Bernard Okech. I'm the director in charge of risk management. So at Shelter Africa, we operate in 44 with an additional and now 45 African governments. And the experience that we've seen across from countries to countries are interesting enough in terms of the key factors that actually drive affordability in the various markets. And as a financier or a funder, Nigeria for a long was a very difficult market for some interesting reasons. You know, you look at essentially the monetary policies or the monetary environment in the country. It's a very interesting market, but we finally cracked it. We believe we cracked it. So last year we did register a debut bond, a program for 250 billion over a 3-year period. And we managed to successfully, float our Series 1. And interesting enough, we were looking at 40 billion. The market, there was an excitement in the market. The total subscription that came in was 60 billion. And we ended up taking 46 billion. To us, I think there is a place for both money market and the capital markets. However, heavy reliance should be on the capital markets if you want to be able to achieve the deficits that have essentially been mentioned here.
The people that are yelling for houses are the young ones, the Gen Zs. They've all worked very hard. They don't want to do the normal office work, so they have ways of making monies. So there's a toll on us to provide houses for them and very affordable. As 2022 approached mid-year, the mortgage market has become quite challenging. To be sure, we have classic case of mortgage boom to burst the cycle of the millennial demands and other demands. As the rates go higher, the refinancing business is cooling, which it always does, and is going to force a massive shrinkage in the mortgage banking business. The interest rates are only going to climb through 2022 as the Federal Reserves seem to tame surging inflation. I believe for mortgage banks, 4 things should be taken away. Apart from our money market, which is the usual thing that we do, we should also explore the capital markets, sukuk, real estate, and once again to have something like sales of federal government houses.
We need a call to action, because there are problems everywhere in this system. But the problems will not go away just by enunciating them. We have to find a solution through with the problems. So I hear things like pricing, funding, affordable housing. So maybe if we put the concepts more articulately, the solutions will then begin to evolve. I did have a cap of working in the pension industry, and everybody eyes the pension industry jealously and think that that 13 trillion should be brought into this market or solve all of our developmental challenges. I often had the challenge of saying to people that the pension funds are not to solve developmental challenges. They are supposed to pay for when you can't work anymore, when you retire. So the objectives are sort of misaligned, but if properly articulated, you can bring that money in, and that's where the challenge is. We haven't defined the size of this challenge. That's just the problem. So everyone is working in silos and trying to make an impact, and that impact won't happen until we bring everything together and begin to say what is available housing rather than affordable. Housing cannot be affordable when everything in the chain is unaffordable. So it is in solving all the points in the chain that you then begin to make housing affordable. That's what needs to happen, and that's when you now have sustainable financing. You don't have to ask the investors to bring money, because they will bring it because they can find value in what you're doing. My call to action is simple. Let's do critical things that would make things change. And the first thing that I would really like to see is to test the listing of a mortgage-backed security from the assets that have been refinanced by NMRC on our markets, so that we begin to see what really is the pricing for, what really would investors put on mortgage assets. A good thing to note is that mortgage assets default risk is very low. The bonds that NMRC is carrying, I think, if you look at the annual reports, it's less than 1% default rate. You know, so that's quality, that's a quality asset. So if they are able to refinance those assets, we will implore them not to take that money back into the refinance markets, but bring that money into the primary markets to create new mortgages. And then we begin to see whether the cycle can hold and it can be tested. And that's how the market then begins to become created. The market is not going to be subsidized by government. It's going to be held by the private sector, by investor capital voluntarily coming to find use. The cycle begins to be created. No matter how expensive it is, you would find people who would borrow and make the system work. So the GSM telephony came in at a very expensive price. What is GSM telephony today? That's how you find the market, and I think that's what we need to do.